Hey, well, thanks again for joining us on our series on home buying tips and credit tips. Today, I'm here with Bill Stouffer, our ERA Home Loans rep, here for the Hershey office, and Bill's going to walk us through what he sees to be the top 6 myths for credit in home buying. So Bill's been around a long time and runs into a lot of roadblocks every day, and these are things that he sees consumers struggle with, or what are their top 6 questions. So we'll start right off today, Bill. Number 1, my credit's just not good enough.
Well, John, technically, you can have a score as low as 500 to purchase a home. You will need 10% down versus a lesser amount down for a better or stronger credit score.
Okay. So I've always, you always stumble into people that they think they know their credit or they know it's going to be bad. What do you suggest? I'd say probably they need to know that score.
Sure. They should talk to someone like me. We'll pull their credit, we'll give them a copy of their credit report, and we'll explain what their credit report means to them as it applies to their personal circumstances.
Okay, great. And of course, there's no cost to that, I assume.
Absolutely not.
Yeah, that's why we work together, right? Now, how about number 2? I have no credit.
You do not need a traditional credit score to buy a home. We'll look at car insurance. We'll look at a cell phone bill. We'll look at health club membership. Anything that you're obligated to pay on time. And if all else fails and you have no credit, but you have a savings account, you'll get the benefit of the doubt and you'll still get a loan.
I've always heard in the past that with FHA, particularly, the old saying was it's better to have no credit than to have bad credit.
If you have, for example, a collection or 2 and no other traditional credit, and that individual will have a difficult time purchasing a home till he's paid those collections off and let that season for a year or 2.
Okay. Okay, how about number 3? I don't make enough money.
Excellent question. It isn't so much that a buyer doesn't make enough money as the kind of money they make and where do they want to live. It's all about setting a realistic expectation to have a mortgage payment that matches your income.
It sounds like the reason we're in such a mess. People were put into homes that wasn't necessarily what they could afford, and that's what we're talking about. Here's what you can afford. What I've always found is that people are more comfortable with a payment that's less than what they actually qualify for. So probably, once again, getting you on the phone, pull that credit score, find out what it is, run their numbers. They're going to be pleasantly surprised today at the interest rates that we're dealing with.
That's true, and with the rates as low as they are, the purchasing power of most buyers has gone up significantly.
Well, it's probably at an all-time high right now.
It is. It is a great time to buy a house.
Yeah, well, we've always said that. All right. Hey, how about number 4? There are no more 100% loans out there.
Well, technically, that's not true. There's 2 100% loan programs. One is VA. Mm-hmm. You have to be a veteran with your eligibility intact. Another is a program that's administered by the U.S. Department of Agriculture, which we typically call a rural development loan. They're geographic specific, but in our area especially, there's a lot of open area that qualify for 0 down, 100% financing.
And that's the important thing. You need to understand that one's driven by a map. So we can bring up a map easily, see if that home that you want to buy is in that qualifying area. Or better, we'll show you the area, then we'll go find a home that's in that area for you. Why get frustrated and love a home that we can't finance? And that's one of the main reasons we're even doing these topics, is to get you informed so you get away from some of the frustration that everybody's feeling and that you're reading about today. Now here's a fun one that we've added. This is tip number 5. This is a personal one for me because I keep hearing from people it doesn't matter what I do, what I study in college. So, tip number 5, or the number 5 myth. What I study in college doesn't matter. Now, how does that apply to buying a home?
Well, lenders will credit college with job time. If you graduate from college and you start work in your chosen profession, for example, you have a chemical degree and you graduate and you start work at DuPont, you can be in a home in 30 days.
So 30 days instead of waiting 2 years for that job history to catch up to you is acceptable, provided you're working within the field that you were educated in.
Yes, we will ask for transcripts. The transcripts will prove that you went to school to be a chemist and you have your degree, and that's all of that time in school is considered job time.
So there you go. If you're in school and you're saying it doesn't matter and I'm getting a social degree but I want to be a brain surgeon, it doesn't work. But if you're in school, get an education degree, you get a job as a teacher, you can be in a home in 30 days, and there's actually some cool programs out there to help teachers, which we won't get into today. That's another topic. Hey, the number 6 myth. I just don't have 20% for a down payment. You're reading that in the paper these days. We're hearing it all the time that it's going to take 20% down. What do you have on that one?
Well, there's a number of mechanisms out there to help buyers become homeowners that don't have 20% saved. One, for conventional loans, it's the presence of private mortgage insurance. So with 5% down and a little bit of closing cost help from the seller, you're going to pay a private mortgage insurance premium to insure the loan against default for the lender for that other 15%. So that lender will make that loan. FHA is 3.5% down, and then we've discussed 0 down with USDA. So there are NVA.
Yeah.
So there are loan programs where 20% is not required.
And they're strong, viable programs. There's no shortage of money. That doesn't
Absolutely.
actually, FHA with only 3.5% down might be the simplest loan to be approved for these days.
That is true. They're a little more liberal with your debt-to-income ratios and a little bit more flexible on credit.
So there you go. Those are our tips for the day. The top 6 myths on credit in home buying. Stay tuned to our series. And thanks for tuning in. I'm John Tice, the Realty Chef. I'm here with Bill Stouffer, ERA Home Loans. Our contact information will come up next. And thanks for tuning in.